Welcome back to our channel, where we empower you with knowledge and insights into the world of finance. In today's video, we're going to dive into the fascinating realm of investing and provide you with a beginner's guide to the stock market. Let's get started. What is investing? Before we delve into the specifics, let's begin with the basics. What is investing? Investing is the process of allocating money or resources with the expectation of generating a profitable return over time. In the context of the stock market, investing involves buying shares of ownership in publicly traded companies. These shares are commonly referred to as stocks or equities. Why invest in the stock market? Now that we know what investing is, you might be wondering why people choose to invest in the stock market. Well, there are several reasons. First and foremost, investing in stocks offers the potential for long-term wealth creation. Historically, the stock market has outperformed many other investment options over extended periods. Secondly, by investing in stocks, you become a partial owner of the company. This ownership grants you certain rights, such as voting on company decisions and receiving dividends, which are a portion of the company's profits distributed to shareholders. Additionally, the stock market provides a wide range of investment opportunities. You can choose to invest in different sectors, industries, and even international markets. This diversity allows you to tailor your investments to align with your personal financial goals. Understanding risk and return. While the stock market offers great potential for returns, it's crucial to understand the concept of risk. Investing always carries a level of risk, and the stock market is no exception. Prices of stocks can fluctuate significantly due to various factors, including economic conditions, company performance, and investor sentiment. However, it's important to note that risk and potential returns often go hand in hand. Generally, investments with higher potential returns tend to come with higher risks. It's crucial to assess your risk tolerance before investing and to diversify your portfolio to mitigate risk. Diversification involves spreading your investments across different asset classes and industries, reducing the impact of any single investment on your overall portfolio. Getting started. Now that you have a basic understanding of investing and the stock market, let's discuss how you can get started as a beginner. The first step is to educate yourself. Take the time to learn about investment fundamentals, different investment strategies, and the principles of stock analysis. Once you feel confident and knowledgeable, it's time to open a brokerage account. A brokerage account is an online platform that allows you to buy and sell stocks. There are numerous reputable brokerage firms to choose from, so do your research and select one that aligns with your needs. After opening your brokerage account, you'll need to fund it. Determine how much money you're comfortable investing and transfer those funds into your account. Remember, it's essential not to invest more than you can afford to lose. Building your investment strategy. Now that you have your brokerage account set up and funded, it's time to develop your investment strategy. Your strategy should align with your financial goals, risk tolerance, and time horizon. Are you investing for retirement, a down payment on a house, or a specific financial milestone? Knowing your goals will help you make informed investment decisions. You may choose to invest in individual stocks or opt for mutual funds or exchange-traded funds, ETFs. Mutual funds and ETFs offer diversification by pooling together investments from multiple investors and spreading the money across a portfolio of stocks. Additionally, consider the concept of dollar-cost averaging. This strategy involves investing a fixed amount of money at regular intervals, regardless of the stock price. By doing so, you'll buy more shares when prices are low and fewer shares when prices are high, potentially reducing the impact of market volatility. Monitoring and reviewing your investments. Congratulations! You're now an investor in the stock market. But remember, investing is an ongoing process that requires monitoring and periodic review. Stay updated on the news and events that can impact your investments. Review your portfolio regularly to ensure it still aligns with your goals and make adjustments as needed. However, it's essential to strike a balance between active monitoring and long-term investing. Trying to time the market or making frequent trades based on short-term fluctuations can often be counterproductive. Remember that investing in the stock market is a long-term endeavor. Conclusion. And there you have it, a beginner's guide to the stock market. Investing in stocks can be an exciting and rewarding journey, but it's essential to approach it with the right knowledge, mindset, and discipline. Educate yourself, develop a sound investment strategy, and stay committed to your long-term goals. Thank you for watching, and we'll see you in the next video. If you found this video helpful, be sure to like and subscribe to our channel for more valuable content. Until next time, take care and invest wisely.